Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Friday, April 9th, 2021. We'll cover the quick look at the indexes and then some of the other trade ideas that I've been highlighting recently on various asset classes, really different commodities, treasury bonds, stuff like that. So let's start out with the NASDAQ 100. We still have that breakout in QQQ very much intact. I'm referring to the breakout above the recent trading range there. Let's box that in for you just for those catching up. Right here you have this trading range. We were in that range back there, and most importantly the top of that area had acted as resistance for last couple, almost a month, and then our breakout candle recently. So we're still above there, and so you can't, again, this puts the QQQ, or at least on the day of the breakout, near-term bullish, and we did have some follow-up once we broke out. And so far it was good for about, if I can get the crosshairs on that level, roughly a 3% rally off there. Now, and we took also out the top of the gap right there, and it pretty much puts us right under that previous all-time high right there. So the Qs still haven't made an new all-time high, but they're not far from it. So I'm going to get to the 60-minute charts in a second. I think we might get a correction before we get up there. Usually when you get that close to highs, a new high, at least that's been the MO for years now. The market, once it gets there, it typically pops it. And when you have divergence, which you do now, it's usually just a marginal new high. So bottom line is, breakouts, typically breakouts to all-time highs in securities, they are considered bullish. And the reason is, when you break out any security, a stock, an index, when it breaks out to new all-time highs, there are zero resentful buyers. Nobody's trapped in there anymore. Everybody is profitable at that point in time that is in that security. It's only when you start going down, that's when you get panic selling, stop loss orders being hit, and all that. So again, on face value, it's bullish, but again, as I said, breakouts that occur with negative divergences and overbought or near overbought conditions have a much higher rate of failing. So that's what we're looking at there. And the bottom line is, where am I going with all this? I think the upside, despite the recent bullish price action, the risk reward is not very favorable right now on the long side, and nor do we have any sell signals yet to short, but I'm going to get to that right now. S&P 500 still doing its thing. It is trading at all-time highs. It broke out above that previous reaction high, and you can see here's that pattern again of, come out new high and come back in, new all-time high, come back in, correct, marginal new high, correction. And so that's been the pattern as we zigzag higher here. And let's look at the 60-minute charts, because that's really where my focus is, and I really like the futures because we have some more additional trend lines. And this is clear pattern. This is NQ, the NASDAQ 100, and it just has this clear pattern for a swing trader. Whether the trend's bullish or bearish, you look for these divergent highs and divergent low. DL means divergent low, as in a positive divergence on the indicators, and DH divergent high. And that's pretty simple stuff, and that's been the trend for a while now. And here we are, we have a divergent high, and although that itself is not a sell signal, it's just a development, conditions that are developing, we do have a breakdown in the NASDAQ 100. Now, is it a sell signal? I mean, technically yes. However, I always say this, the NASDAQ 100 is not going to go too far without the S&P 500 following, because they have a lot of the same stocks. The top components of the NASDAQ 100, they're just heavier weighted. Your Apple, Microsoft, Amazon, Alphabet, but they're also the top components of the S&P 500. S&P is just more diversified. It has some sectors that you don't have in the NASDAQ 100, such as financials, things like that. But that's it. And so there is a breakdown, or called a sell signal on NQ, but it's one that I put as questionable until and unless the S&P 500 breaks out. And so let's get to that one. That is ES, are your futures. And again, you have just a little better developed trend lines on ES than you do on NQ. I'm sorry, on ES than you do on SPY, because on SPY you have trades that are showing from 9:30 to 4 p.m. The regular trading session, where this is the Globex section, which is virtually around the clock. And so there we are. And so, as mentioned this morning, if you want to really zoom in tight, we're below there. But I always say, you can have a marginal breakdown or a trade, security trading below a trend line. But what you want to see for a sell signal, just like a long side breakout, you want to see an impulsive breakdown, a solid red candle, especially a solid 60-minute close. This is a 60-minute chart. Both of the charts I'm looking at here on the futures, NQ, and this is ES. And so, therefore, the fact that the S&P 500 is still holding at or close enough to the trend line, it's not a breakdown yet. But as I said this morning, based on the posture of the charts, I believe it's imminent. I think it'll probably happen today or early next week, although there are no guarantees, because as I like to say, support is support until unless broken. But it's pretty simple. You start to watch for, you probably just, I think what'll do it is a break of today's lows. If you zoom in real tight here, this is the ES, and so you see a drop below 40.82. And look, if you're trading SPY, it's very easy to correlate or replicate these charts, because you're just going to look for a break of today's lows on SPY, and that should do the trick, because that'll put us far enough below the trend line. And my guess, especially day traders, active traders, they're going to look at that reaction low. So anybody that went long today on the pullback will probably have a stop just below there, and so take it out. You'll probably see a pretty good move down, and then that will give us a confirmed sell signal on the market for a near-term swing trade. How far does it go? I could see it going all the way back here to this 30.75 level. The fact that's let me give you the first near-term target. If you're just active trading, let's say you don't want to go home long or short over the weekend, 40.55, that would be your first target. It's not a very big drop. It's less than 1%. But again, if you're trading, day trading, think about the difference of day trading and swing trading is because since you don't have overnight risk when you're day trading, you can take a much larger position because you're not going to wake up to a big gap against your position as you would, especially if you're trading in a security like SPY, any type of ETFs or stocks that are subject to gaps. You remember, if you are trading, futures, you can have stops that, well, they do shut down on Friday after the close, shortly after the close on Friday, and then they don't open up again until Sunday night. So if, that is when you do take extra risk, and you are subject to gaps. That's about the only time you're subject to a big gap is really on the futures when you, go home with a security over the weekend. So anywho, there's the targets, but as I said, the price action in the FANGs recently has been bullish, so I'm not as keen right now on trading the indexes as I am on commodities and some other things. They're like, to me, easier trades right now. They have more clearly, better risk reward profiles. Again, the price action's been bullish lately in a lot of these market leading FANG stocks I'm watching, such as Apple regaining that 125.75 level right there. And so forth and so on, and some others like Microsoft, trading at all-time highs right there, breaking out recently. And so, yeah, take it for what it's worth. Anyways, let's go on and talk about some of the other trade ideas that are, in my opinion, working out better right now. There's really not an actionable trade I don't see on the market other than to be long since the breakout last week until and unless you get that breakdown in ES. Okay, and these are updates all posted this morning. Updates, I just wanted to follow up on them again. ZW, if I don't make mention, this is what we're looking at. And most of these are hourly candlesticks, 60-minute charts. And on the futures, and this morning, and I've gone over this, if you don't trade futures, you can trade WEAT, wheat without the H, and that's the ETN. And just go off these levels. Even if you don't have a futures account, you can go to investing.com. They'll give you free real-time futures quotes and charts, and so you can replicate these levels. There's the first target effectively hit. Remember, these are actual resistance levels. So if you were targeting this first target of 645, 711, you want to sell right about now if that's all you wanted for the quick, the breakout in wheat, which has been since the breakout above the trend line to here, it's about a little over 3%. And so, you get the odds for reaction are elevated when you hit a first target. And again, that's close enough. So effectively that target's been hit now. And I do think we'll probably, whether we get a correction or not, or a reaction off this level, eventually I think we'll work our way up here to that 674 level, at least at minimum. And again, I've gone over this one quite a bit. We could very well be looking at the next leg up in a bull market. So if you're a longer term investor or trader, then you might want to just set your stops, maybe raise them up to at least entry at this point for a worst case scenario break even, or periodically ratchet the stops up if this trade continues to play out. And nat gas, again, just another update to follow up with the charts posted this morning. Still has the potential to rally following this recent divergent low right here. It's kind of been dancing through that 252, 526 support resistance level. Sliced through it, so it's not as significant as it was before. But I believe if we can power on, put that in the rearview mirror, that should open the door to any or all of these potential targets that are marked here. And if you're trading ETNs, there are several out there, but UNG is the non-leveraged ETN. It's fairly liquid, so that would probably be my pick for trading natural gas if you're not doing futures. And if you do like futures, but maybe this contract's a little too big for you, then you have the micro contracts. They have just about everything. They have crude oil, they have natural gas. Natural gas, I believe, is QG, if I'm not mistaken. Just like for crude, you have QM, I think it is. If I'm not mistaken, you want to double check that. Those are the smaller contracts. And speaking of crude, let's look at that real quick because there's some developments to note there. Okay, so crude futures are CL. USO is the non-leveraged, probably the most liquid ETN for tracking crude. But it's worth noting we have a downtrend line that's being tested now. So we could, one of two things, you're either going to get rejected here, get another leg down, or breakout. So, consider this a trade setup. And it doesn't have to, it doesn't necessarily depend on what the stock market does. But if the stock market breaks down sometime soon, as in today, maybe early next week, then you'll probably get a rejection here and move on back down. We've already hit that T3 level 57.25 on a few occasions, but that also helps to validate that as a support level. I had that before it was even hit as that target, but based on some past reactions. And since then, we've had additional reactions, or another one close there. So that's your support. So bottom line is, those are the two most important levels right now: the downtrend line and that 57.25. That forms a descending triangle pattern, and a descending triangle pattern can break either way, and you need to respect it. So again, an upside break is going to be bullish. At minimum, I think it would bring us up to here. You can see these levels: 61, that's about 62 or so, and then 63.75 would be your potential upside targets, and a downside break would open the door for a move down to these potential downside targets for support around $54, and if that's taken out, 51.72. And gold, still liking gold. We hit that 1759.75 target pretty much to the button, and had a typical reaction. My first target was 1744. Here was our divergent low. Then we broke out of the downtrend line recently, back tested, hit the first target, reaction. Second target, reaction. And so now that leaves, anything is possible. Maybe that's the end of the run. I don't think so, based on everything, the case I've been making for a while there. But if and when we break out make a solid breakout above this level, just call it 1760, that should open the door for a move up to that next potential target there, about 1817. So that would be your next objective, or next buy signal, so to speak. And if we happen to go down lower, then I'll give you an update on gold. But my preference is to see us rally here, and that may be the end of the pullback. I want to give you one more level. I just spotted it looking at this chart right there. Ideally, that should contain any pullback. 1724, and I'm looking at that as being resistance right here, resistance, and then mainly right here a shelf of support that was broken and then quickly regained. So that's my preferred scenario. We may not even get down there, and if we do, that's an objective level to put a stop, not too far below that. But long-term investors, this is key support on the long-term chart of gold, the daily chart. And so if you're a long-term investor and you've been cycling or scaling into gold, you'd want to stop somewhat below that line, give it a little bit of room. And this is Sugar SB, or you can trade the ETFs SGG or CANE. SGG is they're both going to track sugar prices. They're just different companies. Beautiful display of technical analysis. This one held that support level like a champ. It was a support zone, came down, hit it for a few days, provide an objective long entry there, as recently highlighted, and then your next objective long entry or additional buy signal came on the breakout of the bullish falling wedge, and this one hasn't looked back. And so what I've added since this morning was this near-term uptrend line. I don't believe that was in the chart I gave you this morning. So there's a level, if you want to put a stop somewhat below there, that would be a relatively tight stop if you're trying to swing up here. But I do favor, as I said this morning, a move up to at least that next target there at about 16. It's 1589 is where the line is right there. And then if that's taken out, 1653. And again, a case can be made with a lot of these ag commodities. They've had corrections. We put in divergent highs. We're overbought, and they've had a correction. So this could be the early makings of the next leg up to new highs and beyond. So again, you have to define your trading style and what your trading plan is for this. Are you an active trader and you want to get the quick, since the breakout, this thing's rallied about, if you grab, I'm trying to grab the bottom there. Yeah, roughly, what is that line? 7%. You want to get your quick 7% run, that's what you did. You hit that today when the first target was hit. You want to hold out for that level, or do you want to just let it run, trail stops up, and hold out for much bigger gains? That's up to you. And Treasury bonds, I'm still liking that trade. It's not really anything on fire, and again, you're never going to make, you can make really good money trading bonds. You just have to leverage up, and that's what bond futures do. When you buy a single contract of something like ZN, it represents about $132,000 into Treasury. So do the math, and it doesn't take much. And so far it's working out well. You had the divergent low, trend line break one here, back test, and then this trend line was taken out recently. And as I mentioned yesterday, there was a minor trend line which, if taken out, and which it did, caused a little pullback, but it's a minor trend line. The bigger picture, more powerful, is this long-standing divergence that's been building in the breakout there. So as the arrow showed this morning, I think this is a pullback that could be, or was viable, and still is at this point. I think we'll power on up and at least hit that 132.094 target, that first target, and quite possibly more. So this one, like I said, I'll continue to give updates, but I still like the Treasury bond trade right now. And that's IEF for the 7 to 10 year bond, or you can trade ZB, the 30-year bond futures, and then TLT, which are your the ETF for your 20 to 30 year longer term Treasury bonds. And the other one that's pulled back today is gold, but it's playing out as it should. Nice divergent low there again. Did I already? Yeah, I already hit on this one. Yeah, I did. Okay, so that's it. I already talked about gold earlier, I believe. So there's gold once again. And what else? What else did I want to cover for you? Yeah, I think that's it. Let's just keep it simple. Focus on these things for now. Anything else stands out, I'll get it out to you. Keep an eye on those big market leading FANG stocks. Again, they just broke out, and that's where the opportunity in the market is. Technology, and that's again Apple, Facebook, Amazon, all those guys looking good, and that's where, like I said, the market's not going to roll over, at least not hard, until these guys do. So you might get a correction coming up soon if the trend line on the S&P 500 goes, that 60-minute trend line on ES. But so far, just nothing but buying since these guys broke out recently. Steady gains and all those market-leading FANG stocks. So they've been consolidating for a while, but like I said, some of those are starting to break out above those trading ranges. And if they can hold, if these breakouts stick, that's going to be bullish. Even if there's a little correction, they get back tested. But a complete failure and move back down within the ranges, that would be quite bearish. And again, we'll take it day by day. Unless it happens, you have to respect those, these breakouts for what they are. And so that's it. Just a common theme of sector rotation. That's why the S&P 500 has been walking higher. When tech was correcting, as it did a couple weeks back, You had other things rallying, and now you're seeing money coming back into tech after the recent correction. So, all right, let's wrap it up here. Get the video out to you guys. And again, if I see anything else before the close today, I'll get it out to you. Otherwise, if we close around on these levels, I probably won't do another update today. We'll pick it up again on Monday. This has been Randy Finney with Right Side of the Chart. Have a great weekend.